Hello everyone, welcome to Series 4 of the GBA Lightbulb Sessions. The Great British Entrepreneur Awards, in association with BT Skills for Tomorrow, have designed a free live stream series of Lightbulb Sessions to support small businesses and entrepreneurs with insightful and advice-driven sessions, featuring some of the UK's brilliant entrepreneurial minds to illuminate your path to entrepreneurial success. You can find out more about BT Skills for Tomorrow by heading to their website at www.bt.com/skills for tomorrow or by clicking on the link in the comments section. In today's session, Great British Entrepreneur Awards Head of Content Jonathan Davis will sit down with Lucy Cohen, founder of the UK's first subscription-based accountancy service, Mazuma. Lucy will outline some of the key things small business owners and startup entrepreneurs need to know to help them get to grips with their finances. She will explain how much an owner needs to understand about their business finances and what they should do and what they should focus on most. There is an opportunity to ask questions during this session. If you have a question you'd like to ask, you can pop this in the Q&A function at the bottom of your screen, and we'll do our best to answer these towards the end of the session. Please note there will be a poll towards the end of the session today, and all answers will be anonymous. And with that, I'll pass over to our host today, Jonathan Davis.
Thank you, Chloe, and thank you, Lucy, for taking the time to talk to us today. I guess it'd be a great place to start to find out a little bit more about you. So tell us about yourself.
Yeah, I mean, first of all, thanks for having me on today. Delighted to be here. I love this sort of thing, and it's such a brilliant set of things to do. So, yeah, well done, guys. Yeah, so I'm Lucy Cohen. I'm one of the co-founders of Mazuma. We were the UK's first subscription-based accountancy service for small and micro businesses. We founded in 2006, so have been in this game we're coming up to our 15th birthday at the moment, actually. So, I started the company when I was 23, so you can figure out my age from that. And we started the company really to make sure that small and micro businesses were receiving the support, advice, compliance work, and all that kind of stuff that at that time in the market wasn't readily available to small businesses. And in fact, even now, isn't super accessible for small businesses. There's been a big shift to software packages, to DIY accounting, kind of using software and things like that. And what it's meaning is that a lot of small businesses are missing out on that really valuable accountancy, tax, advice, support that an accountant can really bring to you, because sometimes there's a price barrier, or sometimes people just don't, you don't know what you don't know. And sometimes it just doesn't seem like a priority. I perfectly accept that getting an accountant is a bit of a grudge purchase. Like, no one really wants to get an accountant, but I promise that we are worthwhile.
Brilliant. And obviously it is a fascinating story, as you said, kind of being the first subscription-based service, and of course it was a story that won you Disruptor of the Year award with us in Wales in 2019,
that's it. Yeah, the last 40 months. I'm not counting. I'm not adding it to my age. I'm not adding any of it on. But yeah, we won Disruptive of the Year. We've always been a very disruptive company, partly because I think quite a disruptive human generally. So that kind of culture feeds down. But no, we don't do things just because they've always been done that way. We like to really kind of look at the needs of the customer and the needs of our clients over our needs as accountants. So if there's a problem there that has to be solved, we like to take the ownership of solving that problem. So yeah, that's kind of how we're disrupting the industry.
Fantastic. So to kind of dive in at the deep end, so to speak, you mentioned in your intro there about entrepreneurs, not knowing what they don't know and stuff like that. So realistically, a lot of entrepreneurs or people do start businesses without being quote unquote business people. They just have an idea and say, I'm going for it. So for those people and ones who who want to do that in the future, realistically, how much do you need to know about the finances and that aspect of the business?
Yeah, it's a really tough one, this, because a lot of people start businesses because they've got an incredible idea, they spotted an opportunity. Even myself, I trained as an accountant and I had an idea. I knew how to be an accountant, but I didn't know how to run a business. I didn't know how to do marketing. I didn't know how to do web. I mean, in 2006, web wasn't that big a thing as as much as it is now. I didn't know how to do pricing structures, all this stuff. So I think the entrepreneurial spirit means that you're likely to kind of forge ahead and kind of figure out as you go along and there's nothing that helps you learn like going in at the deep end, really. That said, though, finance is the one that is going to drive the business. Now, the most common kind of KPIs in terms of business are what you're going to turn over, what is your profit, how much runway you've got in terms of cash, how much cash have you got in the bank, and it's really easy to understand your bank account because we're all really used to that. Most of us have had bank accounts since we were teenagers. We understand what being overdrawn is. We understand trying to kind of budget what's left in the month for a night out or your rent or whatever. But when you apply that into a business, there's kind of different things that you need to consider. And in terms of what you need to know, you need to, I think, start off with at least an understanding of what is driving those numbers in your business. So this, I suppose, goes back to kind of the market research phase, really, is I always like to say, I heard it somewhere and I can't remember who told me, so I'm claiming it as my own now, is that it's great to spot a gap in the market, but is there a market in that gap? So it's great to spot a gap in the market. Is there a market in the gap? So you might have the best idea in the world, but if no one's going to buy it, you've not really got a viable business. And there are examples of businesses that have been way ahead of their time. Netflix is a really good example of having a service that really wasn't appropriate for the world and technology that it was kind of conceived in. So they kind of had to just wait out until the internet was good enough for streaming services to work. You may not have the luxury of that time to wait until you might invent a flying car. You may not have the luxury of time to wait until the world is ready for flying cars. Which I'm sure is probably next year, to be honest, at the rate that we're progressing. But you do need to understand these drivers. You need to understand what are you selling, who are you selling it to, how much are you selling it for, and how much is it costing you to get that thing from nothing to the doorstep into the home or lives of another person, business, etc. That's the bare minimum you need to kind of wrap your head around, and that's kind of what I'd call the gross profit kind of part of the business. That's kind of, if you don't have that, you're really going to struggle when you come to kind of trying to figure out how you're going to grow your business.
Excellent. And obviously you kind of outlined the kind of core things that they really do need to know if they're going to start a business or have recently. Do you think that some people or a lot of people are actually put off starting a business because they don't know enough around the finances?
Yeah, I think it's, I wouldn't say it's more about not knowing enough around the finances, because like I said, you don't know what you don't know. And even myself as a trained accountant, I learned a lot about finances when I started running a business. There are plenty of things I didn't know. I went into it underprepared. So, in terms of the doing accounts versus actually running a business, they're kind of different sets of numbers maybe. But yeah, it can be really off-putting. I think the thing that really puts people off more than anything is kind of that personal survival budget aspect of it. It's overwhelming to look at what it costs you to live as a human being in 2021. And then you look at it and you go, how on earth am I going to get a business that allows me to draw enough money out of that company to meet my personal requirements? And I think that's the bit that's really overwhelming. And if you don't understand that kind of gross profit scenario and that kind of section of your business that's going to drive your ability to create a profit and to be able to draw money out in some way, that can be a massive barrier to people kind of making that leap into business.
Yeah, and so do you think that it is a case of, like we said, throwing yourself at the deep end when it comes to starting your business and learning these aspects, or trying to get to grips with a bit of it beforehand is going to kind of put you on a more even footing?
Yeah, absolutely. I think, look, I'm not saying you've got to go and be a chartered accountant and train for 7 years or something. You definitely don't need that. But you do need to have a basic understanding of some of the core values. And the best bit, there's all kinds of information out there, way more information out there than there was when I started my business, and it's so easily accessible. So, like, for example, we create YouTube videos that explain different parts of accounts and tax and things, and there are plenty of people who give really good bite-sized bits of information that are just enough to kind of get you to that stage of kind of getting that basic understanding. You don't need to be able to pull together a profit and loss account when you first start a business, and there's plenty of software and spreadsheets and things like that out there that can help you put together forecasts, but you can only do a forecast once you understand that first bit. So it's this kind of you can't build a house on sand. So this is your foundations, is understanding those gross profit drivers in your business, what's making you money, what's making you profit, what it's costing you to do it, and from there you can then hurl yourself in at the deep end, and I promise you'll figure the rest out. It will just kind of happen, because you'll have hopefully people around you who can help and guide you. But those first bits, there's nothing wrong with taking a little bit of ownership. We do get people who have done incredibly well in business, and have no idea about it, and just come in and it's a bit of a mess, and then it becomes very overwhelming. So when you've had people who, by luck, judgment, brilliance, genius, have had a phenomenal first year in business, or things have taken off more than they expected, and they're just kind of chasing their tails then, and they'll come to us and go, oh, help. And we look at it and we go, all right then, so we need to look at this, we need to look at this, and this is what this is, and then you're going to have this tax bill. And they're like, oh, I don't know why. You don't want to be in that scenario where you're being surprised by some number down the line. That makes it sound like they're going to leap out from behind a bush at you, like the number 7's going to like accost you. You don't want to be in that being accosted by a giant number 7 scenario, but so you do want to kind of have a handle on it. And if at any point you're feeling overwhelmed by it, that's kind of a really good indicator as a business owner, going, look, this is making me overwhelmed. I'm therefore not going to be my best self if I've still got this kind of playing around in my head. I need to go and speak to somebody. I need to go and get some support so I can kind of offload the responsibility of that worry to someone else.
Yeah, and that's, I guess, kind of like the more internal, personal signs that you either need to go to an accountant or hire a finance someone to take care of the finances. Is there any kind of milestones or signs in terms of the business that you need to look out for?
Good question. Yeah, possibly. If you red flags, red warning signs is being in an overdraft when you didn't expect to be, receiving bills in you didn't expect, having trouble chasing your debtors. So, I mean, I always advise people, it's really old school to have like 30-day payment terms. I think I'm making this up now, but it probably goes back to the days when people used to pay via snail mail and checks, and it would take that long to get a payment to somebody. Now, there's no excuse for it. You can charge people up front, you can do 50% up front. But if you're having trouble bringing that money in, you probably need to look at getting some help somewhere along the line. Suddenly having more money than you thought, I mean, it's a good problem to have, but it is a problem, because if you're suddenly making more money than you expected, what's that going to mean down the line in terms of implications for tax, or what's it going to mean in terms of the potential implications for growth? I think another thing is recognizing seasonality. So I always give the example of, if you're either an ice cream seller or a Christmas decoration shop, you're likely to have two quite distinct peaks in the year of your business. So knowing what those peaks are, and then not kind of freaking out at the opposite end of the year. Like, if you're an ice cream seller, don't be worried if you're not making tons of money in December. It's probably not your season. And I think as well, another warning sign or a time to reach out for help is if it's starting to bother you. Some people love digging about in their numbers. I'm gonna put it out there. I'm an accountant. I don't love it. My business partner Sophie is the one who is obsessed with the spreadsheets and the software and all the things. I just waltz in with my sales plan. I'm like, here's what I think we can do, and she's like, what's that going to cost? So that's the way we work. Is I want to spend money and she tells me no, and that's kind of how our business relationship has worked for 15 years. It works well. We're not bankrupt yet, so that's good. But no, it's having it's if it starts to bother you. So you get to the point where it's keeping up at night, or you get a brown letter from HMRC on the doorstep, and you don't open it because you've got the dread. That's the point you need to go, right, this is beyond my wheelhouse. I need to get somebody else in, and it will save you a lot of anxiety in the future doing it. Even if, like I said, it's a grudge purchase, you don't necessarily, not that you don't want to spend the money, but you're not thrilled about spending the money on an accountant. Reframe it as, you're not spending money on an accountant, you're spending a bit of money to keep your own peace of mind.
Yeah, I think that's a really interesting way of looking at it. I think it's certainly a lot of entrepreneurs wouldn't even comprehend thinking of it in that sense.
Yeah.
You mentioned, I think you probably touched on it a little bit there, but what damage could it cause a business not coming to an accountancy firm or hiring someone if you don't do it in time?
So the biggie is unexpected tax bills. Over my 15 years in this, and I've been in the industry 19 years, I have seen thousands of small businesses who've not, the classic is salary dividend split. So they've just been willy-nilly taking money out of the company with no idea of the tax consequences of it. It comes to, they haven't engaged an accountant through the year. They get a letter from Companies House and it goes, your tax return's due, or your accounts are due, and you panic, you go to an accountant, they get it done, they go, all right, here's your corporation tax bill, and oh, by the way, you've got a huge personal tax bill and a payment on account to deal with. Now, if you're expecting those and you understand the way that you're taking money out of your company, then you can absolutely make a plan for those and have a kind of contingency. If you are not expecting those, unexpected tax bills are the number one problem for entrepreneurs who are not kind of engaging with accountants. You kind of, if you don't know anything else, know what you're going to have to pay in taxes, because they're not going to let that slide. You will have to pay that tax somehow, sometime. It's a death and taxes, right? It's an inevitability, so you're going to have to pay it. And just know that I'd say that's probably the number one thing that that we see, which is a big cause of issues and kind of unnecessary stress and financial trouble for people.
Yeah, and do you think it restricts growth if you don't do it soon enough?
Oh yeah, absolutely. Yeah, of course it restricts growth, because you don't know, you don't know where you're at. You don't know if you've got a big tax bill round the corner going to leap out at you, and you're not expecting it. You might spend that cash on something else, and then you're going to have to change your plans later on in the year when you're having to somehow juggle things around for that tax bill. If you know that tax bill's coming, you might look at your cash flow gap and go, right, how am I going to fund this? What am I going to do? Do I need to negotiate better creditor terms? Do I need to bring in some more money in the top funnel? Do I need to increase my sales efforts? All that kind of stuff. You can plan for it. This is all about, you can't manage what you're not measuring. And if you're not measuring it and you're not seeing it on that kind of prediction in the future, there's absolutely no way that you can run a business without kind of understanding what's down the road.
Excellent. And what, I mean, I imagine which side of this argument you're probably going to come down on, but what are the pros and cons of hiring a finance director in-house versus a third-party software or accountancy service?
Yeah, so this is really about horses for courses. If you're, and I wouldn't say it's necessarily pros and cons of each, and maybe not that black and white, but it's about getting the appropriate support for yourself. So in the same way that I'd hope you get the appropriate finance for the thing you're buying, so like you don't buy a house on a credit card, although I don't know who'd have a credit limit on a credit card. Kanye, maybe, I don't know. Would a Kardashian could probably buy a house on a credit card. But you don't, you match the source of funding to the thing you're buying. Like you don't take out a 30-year mortgage to buy a car, for example. You need to match your type of financial support to what you need, and be really honest about it. I tend to find that entrepreneurs fall into two categories, quite very, very broadly, but they either think their business is really, really simple and so it doesn't need a lot of support, and then are surprised and unwilling to engage this level of support they need, or they think their business is incredibly complicated and then are surprised at what they're quoted by saying how complicated their business is. Be absolutely honest with yourself about the complexity of your business and what you need, and take all ego out of it. You probably, if you are a startup in your first year, unless you've raised huge amounts of Series A funding or you're on a high growth trajectory, if you're not VAT registered yet, you probably don't need an in-house finance department or or even a part-time FD. You need either an outsourced service like a subscription like we offer, or you need, if you like software, you need a good bit of software to keep you running over, as long as you're okay with filing stuff yourself and then engaging an accountant once a year. If you are a more complicated business, so maybe you're taking an investment, you're giving out shares to employees, you're on a kind of a fast track scale up kind of journey, you might want to plan for the future. So you might want to start off with just someone who can help with the basic compliance, but you might then quite quickly move into, right, maybe a part-time FD and someone who's going to give a more strategic version of finance is somebody that we kind of need to engage with. But this is about knowing your own business and being really brutally honest with yourself. If you are a self-employed tradesperson and it's just you and you're a sole trader, you definitely don't need a part-time FD. And it's just matching that thing up and finding the appropriate service. And also knowing you may grow in and out of services. So what is appropriate for you in year 1 might not be appropriate in year 10. And vice versa. So it's just a case of kind of understanding what's out there on the market. Not all accountants are the same. They've all got different skills and abilities. They all prefer to work with different sorts of businesses. Just make sure that what you're seeking is matching up with what you actually need.
Excellent. And in terms of finding a software or accountancy service, we mentioned kind of stages and milestones earlier. Is there any kind of indicators in terms of, you mentioned just the one person sole trader, if you're more uncomfortable with it, using effectively like a DIY platform that you yourself, is there kind of any stages where you need or should go from that to a more fully fledged accountancy service?
I'd say anything that is involving more regular filings. So if you're a limited company, yeah, I mean, straight away get an accountant, because you've got all kinds of additional issues there about taking money out of the company as the proprietor. It's not as simple as the limited company is a separate legal entity to you as an individual, and that's quite a lot to wrap your head around. And and this is where it comes down to, there's a reason that accountants train for so long, because that's actually, even though we deal with it day in day out, it's actually quite a complex thing. In the same way that, I don't know, like a GP surgery might be able to remove a mole for you. It's relatively, in this whole scope of medicine, quite a simple procedure, but you probably wouldn't want to try it yourself just because it's simple in the scope of medicine. The same applies here to like limited companies. If you've got a limited company, get an accountant. Do you know what? They're worth it. Most of them will charge you a decent fee for it, and they're absolutely worth it. If you're VAT registered, get an accountant. If you've got people on payroll, get an accountant. Basically, if you're having to fulfill anything other than the kind of most simple obligations to HMRC, which is the once a year tax return, I'd recommend having somebody you engage with on a more regular basis than once a year, because you will definitely see value from that. Just the frequency of the amount of communications you get from HMRC and Companies House can be mind-boggling. I don't know who writes those letters, but they sound terrifying. I had one the other day. I knew I'd paid my tax bill, and I had one drop onto my doorstep, and I opened it, and it basically told me some debt collectors are coming, and I was like, oh no, and I panicked. And I have been in this industry, I see these letters all the time, and I panicked, and I was like, no, I know I've paid this. They just allocated it to the wrong place, but I knew a phone call would sort that out. I know that, and still panicked with all my years of experience. I can't even imagine what that would do to someone who's just started a business and HMRC have got something wrong, which does happen. It's always pretty easily fixable, but you need someone in your corner to do that for you. And do you know what? It's just going to save you a lot of hassle. It's just going to save you those 4 a.m.s waking up going, oh, I forgot about this thing. Let someone else deal with it so you can focus on what it is that you want to do.
Yeah, definitely. And in terms of finding what's right for you, obviously things are going a lot more digital. If you're looking for software, what are some of the key things that you need to look for?
Don't overcomplicate it. Again, this is about what do you really need. There are so many software packages out there, and I'm going to say you might not even need software. A spreadsheet might be all you need. Let's not incur costs that we don't need. So if you're not a complex business, you can probably operate quite nicely off a spreadsheet and a free invoicing tool, and your bank account, or expense allocation within your bank account or something. Let's not overcomplicate this, because if you make it too complicated, you end up not doing it. And if you end up not doing it, you end up not knowing what's around the corner, and then all that other stuff. So it's really tempting to look at the big glossy TV adverts and be like, and I'm the worst for it. I love a new piece of technology. I think that every new piece of technology is going to solve all of my problems. It never does, because I can't tell you how many pieces of software I've got the free trial for, paid 2 months for, realized I've not used it, and then quit because it's clearly not the right thing for me. Even in our own company, we use spreadsheets. All right, they're slightly more complex spreadsheets, but we use those for kinds of forecasting and playing around with figures and stuff, because they're actually the best. Pivot tables and things like that are actually the best thing to use for us. Having a piece of software is going to involve putting all that data into a system that we're not all super comfortable with, and it's just going to delay things. So it's about, again, this is about knowing your business. Do you love putting stuff into software? Do you love, like, Thursday afternoon or whatever, do you love sitting going, oh great, software time, I'm gonna like put all my stuff in here and I can't wait to do that? Tell you who does. My business partner Sophie, she loves it. I do not. That is not for me. I would need somebody to do all that stuff for me. So be honest, there's no point you get an expensive software subscription if you're literally not going to use it. In terms of kind of what's around the corner, legislative wise, there is making tax digital around the corner, which is going to change things for everybody. Anybody who owns over more than £10,000 a year is going to be hit by making tax digital, and that is going to increase the amount of filing you do to HMRC. Again, my advice is let an accountant do it for you, because it's all well and good having software and having to file once a year on it. Maybe if you're suddenly filing 5 times a year and the penalties for missing a filing or getting it wrong, do you want that? Do you want to have that kind of burden? There's lots of software out there that accountants share with their clients, where they can share data or files and things back and forth. Plenty of stuff. You can just look at your accounts on your smartphone, hook it up with your bank account, use open banking. And some people like good old pen and paper and piles of paperwork. There are plenty of industries where paper's still a thing, and we're not going to be in that kind of digital format by default for a long time. That's absolutely fine. We deal with a lot of clients who we call, we kind of categorize them into pro tech and no tech. And pro tech are people who love snap send apps, kind of the loving life in technology, cool. But no tech, people who, my sister, for example, is an artist. She lives and works and breathes the physical world. There's absolutely no way I'm getting her to link up an open banking integration to a piece of software and asking her to send that to us once a month. She's not going to do it. She's going to run away from it. So she sends stuff to us in an envelope, and it's all her receipts, and that's fine. We deal with that as well. It's finding something that works for you, and that you can start at the softwares, just to name a couple. So FreshBooks, for example, starts at a really accessible kind of entry point. You're talking kind of £2 or £3 a month for basic invoicing and stuff like that. For a lot of startups, that's probably all you need, and then you can grow through it, and then you can move on to some of the ones you see the big TV adverts for when things get more complicated. What I would say is, don't be impressed by pretty graphs and things like that, because graphics and stuff like that. They look lovely. They don't actually do anything. They don't tell you anything that your accountant can't tell you. And my other warning is, when it comes to software, rubbish in, rubbish out. So if you don't know what you're doing and you're putting data in that, the data you're reading back of it, those reports you're reading out the other end of it, aren't going to be right. So do remember that when you're using software. But yeah, it's about finding what fits again.
Excellent. And so in terms of, obviously that was looking specifically for DIY software.
Yeah.
In terms of finding the right account or accountancy service, what are the kind of things that you need to look out for?
Yep. So look at what size of business they deal with. So for example, we deal exclusively in small and micro businesses. So clients who, they might be a startup and start with us, and then after maybe 2 or 3 years, they outgrow us. And that's fantastic, because it means their business has grown. And that's absolutely fine that they've kind of outgrown our service, and we can help them find another accountant that's more appropriate for what they do. Look for an accountant that works in the way that you like to work. So warning signs for me with accountants are ones that will going to force you to change the way that you like to do things, or obviously if you're doing something illegally, they're going to force you to do that, and they absolutely should. But just if you have a preference of how you work, there are, I think, I want to say that Iris put out some research recently. There's something like 71,000 practicing accountants in the UK. So there's plenty of choice out there. Like, you can have a look around. Find someone who works the way you like to work. Find someone who, even down to the way they talk, if you really enjoy that face-to-face, I want to go to an office once a quarter and sit there and talk to somebody, then a service like ours, for example, is not going to be suitable for you, because we don't do that. But there are loads of accountants who do that. If you just don't want to think about stuff and you just want someone else to deal with it, then use a completely outsourced service. If you like a specific bit of software, work with an accountant that uses that. It's just about doing a bit of market research. But I think the most important thing is having a bit of a rapport with the accountant. So, and feeling comfortable. You want to feel comfortable enough to kind of tell them your tax woes, or tell them what you're worried about as a business, because they are there. And we saw it during the pandemic. Our guys were kind of unofficial counsellors for businesses as they kind of went through the roughest time they've ever been through. They felt empowered enough to talk to us about their concerns, and that's really important, because it is a trusted advisor relationship, and you should be able to tell your accountant, like your doctor, you should be able to tell them anything.
Brilliant. Something that you mentioned earlier that I wanted to explore was the kind of balance between cash and profit.
Yeah.
That's a very delicate balancing act for entrepreneurs.
It is. So profit doesn't equal cash, and loss doesn't equal no cash. It's complicated. So the reason behind this is because you calculate your profits. It isn't money in versus money out. It's income less allowable expenses, and then including certain accounting treatments like depreciation and amortization, which is stuff that an accountant will work out. And that's to do with stuff that sits outside of your profit and loss account. It sits maybe on your balance sheet. One of the most common things that comes up is someone will have a tax bill and they'll be like, I don't understand how I've got a tax bill. I haven't got any money. That's really, really common. And that's because there's something called the accruals concept in accountancy. So it's that most people, if you're a very, very small business, you can go cash-based, but most people use the accruals concept. That's how accountants learn to do accounting. And it's that things are accounted for when they happen, not when they're paid or money's received. So if you think about sales income, I talked earlier before about debtor days and creditor days. If you look at, say, sales income, you might send a sales invoice out on the first day of the month, and then not physically receive that money in for, say, 90 days if someone's a bit tardy paying you. That means basically then that you've got a 90-day difference between when that sale is counted in terms of your profit loss versus when you get the money in. So that's where that difference, it's a timing difference and an accountant treatment difference. And it's really important you don't have to understand it, but remember it. Remember that can happen. That's why cash flow forecast can be useful. What a cash flow forecast is doing is trying to basically predict your bank balance in a year or a month's time, whatever else it is. That can be really useful because you'll maybe be paying tax bills in a different financial year to the year you're in. Most tax bills are paid, say, 9 months after the end of the tax bill, a tax year. So you're crossing financial years with certain things that don't show up in profit and loss. And that's where that kind of confusion comes in.
Yeah, and I guess that's why cash flow is such a difficult aspect of business to manage for entrepreneurs.
Yeah, cash flow is one of the most tricky things to kind of wrap your head around. I mean, it's almost impossible. Like, who I've never done a cash flow forecast for my own business that's ever been right. Like, I've never ended the year with the money I thought I'd have in the bank account, but that's fine. It's a rough guide, and these things as well. Remember that forecasts you can have base, you can have stretch, they can be fluid, they can account for kind of different external factors like we've seen. We redid our forecast when the lockdown happened. Cash flow is a really tricky thing as well, and when cash runs out, it's a cliche, but cash is king.
Yeah, definitely. I'm just conscious of the time. We've had quite a few questions.
Oh, lovely.
So I'll move on to those before we wrap up. So I think that one we probably answered already. So this is from an anonymous attendee who asks, if you have a complicated integrated financial model, where do you start to create cash flow?
Oh, that's a really good question. Hi, anonymous. Yeah, really good question. So there are more complicated cash flow softwares out there, specific cash flow softwares that you can build more complex models into. So we're talking about maybe like variable pricing or exchange rate differences. Lots of import export tends to be a little more complicated. I would look for rather than having the one that's as a default within your accounting package software, maybe I'd look for some specific software. Or there are loads of companies, if there's no, the thing with softwares is they're not a one size fits all, they are customizable to an extent. If you really need something that is bespoke and absolutely tailored for what you do, you can go to Excel specialists and ask them to do you a build of pivot tables and complex spreadsheets that can output in the way that you want. So we've used Excel specialists in the past to kind of where we've had complicated reporting and stuff to do, which involves huge amounts of data going in and having to organize it with lookups and taking hours and hours and hours if you were doing it manually. You can do that. So that's something that I'd is actually underused, I think, by businesses, is finding an Excel specialist to do this thing. Certainly if you've been out there, you've not found a bit of software that you think can cope. And there's nothing more frustrating than putting all your stuff into a bit of software, your data, and then running it and going, oh, this isn't going to work. That's really annoying. If you've done that 2 or 3 times, try an Excel specialist. They're surprisingly affordable as well.
Okay, excellent. And I'll just say, if we don't get to any questions, I think Chloe already has. If not, she will be popping Lucy's LinkedIn profile in the chat function. So if you do have any other questions, or if we don't get to all of them, then you can get to Lucy there.
Yeah, come and hound me on LinkedIn. That's cool.
We've got one from Caroline who says, can you explain the difference between corporation tax and tax on dividends?
Yes, so they fall into 2 different tax regimes. So corporation tax is a tax that businesses pay. So I talked earlier about the difference in terms of legal entity between me as an individual and my limited company. Even though I might own all the shares in the company, be the only employee and the only director of it, there's a legal separation. You're different legal entities. So corporation tax applies only to corporations, basically, so limited companies. Personal tax is something that happens to dividends. So dividends are a shareholder's reward for having invested in a profitable company. Congratulations, you. And you'll pay tax on that under the personal tax regime. And so it goes into your personal tax return. So that's the core difference. And the rates of those dividends vary depending on your tax code, how much other income you have, all that kind of stuff. So how much you end up paying at what rate is going to depend on how much you've taken and a host of other factors.
Brilliant. Another one from Harry who asks, is it easy to switch accountants?
Yeah, super easy. It didn't used to be, or we didn't used to, people didn't used to act like it was, but yeah, it's really easy to switch accountants. A really good time to switch is around your year end, because you'll have your old accountant close out your year and then your accountant started it. It's just nice and neat. But if you want to switch midway, that can also be done as well. Just bear in mind, you might have a bit of a crossover of fees. You might end up kind of double paying for a little bit of it. But if it's more appropriate for your business, then yeah, it's very easy. Accountants do something called professional courtesy. So what happens is in the background there's a bunch of calculations and bits and pieces that you won't see because they're just working papers and sheets that we use to kind of, it's all very boring really. And what happens is when you switch, you tell your accountant, they'll write to your new accountant, and then hopefully the new accountant says there's no reason that they can't act for you. The most common reason sometimes that the clearance isn't given, and that's because accountants, if you haven't paid your last accountant, they won't hand over the records. So you pay them, and then you'll hand over the records. And they're allowed to do that because they're their working papers. They're our working papers. They don't belong to you. But we hand it all over in the background, and then we pick you up and we onboard, and then you can carry on with a new one. I want to say it's easier than switching bank accounts.
Excellent. Okay. We've got another one from Patricia, who asked, in terms of making tax digital, when do self-employed workers have to go digital for their accounts? 2023.
Which sounds like it's a million years away, but it is surprisingly close. My advice would be wrap your head around it now. Like figure out HMRC, we've had so much else on our plates in terms of obviously COVID, Brexit, other things as well. The communications around making tax digital have really been left to vendors. Like I've not seen much of an HMRC campaign around it. It's been left to big software companies who've got a lot of money to put that kind of stuff out about things. And I actually think that personally, I think there should be more messaging centrally to kind of explain what it is and what taxpayers have to do. But yeah, I think that for GBEA, we did do a Making Tax Digital guide at some point. So that's available, which kind of gives you the broad strokes of what it's going to be. But if you get a system in place now that is Making Tax Digital compliant, you haven't got to worry about it. You're sorted. You can be smug whilst everyone else panics.
And along those lines, I know obviously you mentioned for self-employed it's 2023. Is that the same for small businesses?
So there's a scale. So depending on things like, people who are VAT registered are already working under Making Tax Digital. So what you probably want to do is go and look at the roadmap, see when it's going to start affecting you. But do you know what my advice would be? Just start making that shift now, so that it doesn't matter what that date's going to be. You're already covered. Don't leave it till the last minute and then be kind of scratching around trying to find something that works. You get going with it now. Use an accountant that's kind of got their head around Making Tax Digital and is compliant with it all. If you're going to use software that's Making Tax Digital compliant. And then when it comes around, you're not going to have to worry about it.
Excellent. I think so. Caroline's just asked where they can find that guide. So it is on the Great British Entrepreneur Awards website. But I think Chloe's just put it in the chat function. Yes, she has. So
there we are.
That guide there. I think that's all we've got. I think that covers all of the audience questions. I've just got a couple more before we do wrap up. So I think you probably mentioned a few of them throughout the last, 40 minutes or so now. But what are some of the biggest mistakes that you see entrepreneurs make when it comes to finances? And more importantly, I guess, how do you avoid them?
Okay, so I suppose my top tips, let's go for 3 top tips on avoiding all mistakes. So top tips in terms of avoiding making mistakes with your finances. Number 1, understand the nuts and bolts of your business. So like I said earlier, how you're making money and how the costs involved in generating that income. You've got to get your head around that. That is the foundation upon which your house is built. Number 2, self-awareness, understanding what your triggers are, what stresses you out, and at what point you think it's inappropriate to get an accountant or somebody else in or not to help you. Self-awareness in terms of finance is huge. And number 3, recognizing that your numbers are a core part of your business and you don't have to understand absolutely everything about them, but you have to remember they're there and be prepared to kind of revert back to them every now and again. And as a bonus one, cash flow. Get your head around cash flow, cash versus profit. Get your head around that, and it should be a lot more plain sailing than otherwise.
Excellent. Well, yeah, I think that just about takes us to the end there. Lucy, thank you so much for the past, like I said, what are we, just over 40 minutes now. There's been absolutely tons of advice in there, which I think will leave a lot of today's attendees in good stead going forward. So
excellent.
Thank you so much for taking the time to speak to us today. And with that, I will pass you back to Chloe.
Thank you so much, Lucy, for joining us and sharing your knowledge with us today. It's been great to have you. Do you have any final words before we sign off?
Oh, final words. I'd say that my main thing is numbers can seem, they're not something everyone's super comfortable with, and they can seem really, really scary. Understand your own tolerance of numbers and how involved you want to be, and then have a strategy that works for you and your business. Ultimately, you want to spend your time running your awesome businesses and not worrying about this stuff. So remember that getting some help with it sometimes isn't a payment for the help, it's a payment for your peace of mind and your sanity.
Fantastic. Thank you very much. We'll be back next week at the same time with JP Then of Flirp, Bobby Stockley of Sophia Webster to discuss the future of high streets and e-commerce. If there is anything you'd like to catch up on from today's session, we'll be sending out a replay of this recording later on today, and you can find the replay and future sessions at www.lightbulb-sessions.haysummit.com. Thank you very much for joining us today, and thank you again, Lucy and Jonathan.